Australia's biggest miner and the third biggest company on the ASX, BHP, handed down their full financial year results. Here's what you need to know now. BHP reported underlying attributable profit of $9.06 billion. That was broadly in line with the prior year, just 1% down in fact. Now this met the mark for Bell Potter and Citi's expectations of $9.06 billion, but was less than the $9.2 billion that the market was looking for. Now it comes as commodity prices fell on top of lower volumes and of course weaker demand from some countries. This was partially offset though by higher iron ore prices and in particular Chinese economic recovery. Now total revenue fell 5% to $42.9 billion, but it's important to note that the bulk of that came from BHP's iron ore revenue, $20.8 billion in fact. Costs reduced in good news for the group, but it wasn't enough to offset the reduced demand, and that's why we saw earnings or EBITDA fall 5% to $22.1 billion. BHP declared a total FY20 dividend of $1.20. That's down 10% from the same time last year and also slightly less than what the market was expecting. And it's important to note this total dividend includes a final dividend of 55 cents US that's payable on the 22nd of September, and that'll give a total payout of 67%. As to what the future holds, well, the CEO said today most major economies are expected to heavily contract this year, except China, which will see a recovery. And the recovery will vary from country to country. As for the commodity makeup, well, the majority of earnings come from iron ore, as we mentioned, followed by about 20% from copper with 10% from petrol. The minority makeup is from coal, and on that, BHP plans to exit its thermal coal or energy coal business to only keep high quality coking coal, which is used to make steel. This means BHP will be looking to sell its BMC joint venture with Japan's Mitsui and Co, as well as exiting the New South Wales energy coal business and its Colombian coal mine. So keep eyes peeled for future sales of these businesses and possible returns of equity to shareholders in way of special dividends. That's if the sales do take place. BHP shares are already up 58% from their COVID bottom, and BHP was maintained today as a UBS buy as well as a Goldman Sachs buy as well.